So we're really excited to be talking about the retail investor, the next ESG frontier. And I'm lucky to have with me today Isabelle Millat. She's head of sustainable investment solutions for global markets at Société Générale. So welcome, Isabelle. And we have Jennifer Wu. She's global head of sustainable investing at JP Morgan Asset Management, formerly of BlackRock Sustainable Investing Team and the Asian Development Bank. So thanks both ladies for joining me today.
Thank you.
And hi, and Jennifer, I wanted to start with this kind of no arguing about the explosion that we've seen in ESG responsible investing in the last few years. But I think the big question is, how do we protect those retail investors in sometimes very volatile markets?
That's a great question. I think there is definitely a lot of confusion in the market now with regards to what does ESG actually mean? How is that different from sustainable or impact? The reality is there is lack of standardizations on how these funds or financial products are being constructed, and then also inconsistency across reporting. So I think for retail investors, one of the most important things that needs to take place is really around regulation, right? Creating a standardized taxonomy on how corporations disclose these types of information so that all players can have access to consistent information and data. And then also a framework around, what would constitute a ESG or sustainable product, labeling rules, etc. All of those need to come into play. And I think at the end of the day, it's also about encouraging transparency and disclosure, right, at the individual product level as much as we can, such that we can help the retail investors to better navigate.
Yeah, I mean, I wanted to pick up on that. You mentioned regulation. We've seen the SEC, a flurry of new regulations proposed. They're even asking retail investors and the general public to get involved in that. I think the deadline's June. So it seems that they really are taking on board what you just said.
Yeah, no, absolutely. And I think they're really coming at from two angles. The first one is, as I mentioned earlier, the source of the information has to come from company, right? Because at the end of the day, what we care about is the ESG performance of individual companies, and they are the owner of those data. So there needs to be a framework in place such that companies can report, and that there is third-party auditing agency, for example, to be able to validate those pieces of data, right? So that's a key focus of the SEC, to make sure that disclosure starts from the source. And then the other lens, obviously, is once you have that data, as financial services, what do we then do to package those information and use those to construct products and deliver financial advice to retail investors? What kind of reporting do we then do? I think it was last Friday the SEC issued a what they call ESG risk alert. Right, there seems to be going to be examinations on financial services companies, so asset managers or financial advisors, on when they say this product is sustainable or ESG, what's the process in place, their policy, reporting, etc. So I think it's all moving to the right direction. And you're right, Sarah. Like the SEC is very focused on this now.
Yeah, and Isabelle, bringing you into this, because we've seen that some criticize maybe the US was behind the curve. Maybe that's why we're seeing the SEC so busy. But in Europe and further afield, they've been a little bit more proactive, should we say, on this front?
Well, yeah, we can say that indeed. I'd even say 2021 and beyond are a watershed moment for ESG regulation in Europe. It's quite a overhaul, and I'd say these regulations in Europe, they do aim at defining a sustainable taxonomy and product categories, and couldn't agree more with what Jennifer said. The transparency is key, and it all starts with companies and the data they report. But for customers, especially retail investors, creating a common vocabulary can make ESG more accessible. Second, European regulation will require collecting retail investors' ESG preferences, and then you take them into account in investment advice. So think about it, opening a systematic discussion on sustainability with retail clients. That's for sure a driver of growth, and then it's our responsibility as product providers to meet that demand with competitive and transparent investment solutions.
Yeah, and how do you do that, Isabel? If we think about products, we think about they need liquid products, obviously. They need to be customized to what they need. How is that given in, say, public markets?
Well, it's a good point. Often for retail clients, it's harder to put savings into a liquid green or social project. So a lot of the solutions rely on public markets. But I'd say collectively in these markets, retail investors have a huge power. They can choose investment solutions focusing on listed companies which contribute to the UN Sustainable Development Goals, and that sends a powerful message and shifts large flows towards these companies. But we can accelerate this shift. And to do that, we need to, I'd say, complement ESG funds. The goal is to grow the market. It's usually for us a two-step process. First, we offer sort of custom bonds whose performance is linked to specific indices or baskets based on ESG criteria. And second, to your point, we use also risk control mechanisms. So the products, meet retail investors' needs like liquidity or capital protection. So it's a way to make it, I'd say, not a why, but a why not question, for them. Why not choose the ESG product if it offers, same or superior capital protection or a coupon level?
And I think that's key, Jennifer, because GameStop, I know it's not related necessarily to ESG, but it really showed the power of the retail investor. I mean, they were up against the hedge funds, right, squeezing them. And yet they were in a stock that was up 1,600% in one day, and it's off 50% its highs now. So, we've got to be really careful with risk there for the retail investor, because they don't have the platforms, the same access to the same information as, say, an institutional investor.
Yeah, I agree. And Isabel made a really good, important point, which is around consistent messaging and transparency and reporting. I think the situation with GameStop just shows how not only retail investors can make a difference, right? If they are focusing on a particular value that they really think it's important, and they can use their own capital to influence how the market moves. But I think it also highlights the other approach of ESG, right? I think historically, when we think about ESG or socially responsible investing, it's really just about excluding companies that you don't like or doesn't align with you, right? The exclusionary based framework. Whereas now, you want to lean in, right? You want to actually reward companies who are doing a good job. You want to lean in, invest in companies who are transitioning such that you have a seat at the table and you can really push those companies. So I think it's a new way of thinking about using ESG and capital, combining the two to try to create meaningful impact.
Let's pick up on that, Isabel, because obviously we always care about what's next, what's the future trends. So given what Jennifer's talking about, that leaning in, not going for exclusion, what trends do you see in 2021 and beyond for the retail investor?
It's actually a fantastic segue, because indeed, the first trend is creating a positive impact and seizing opportunities. Initially it was about risk, but now more and more opportunities. And that comes with I'd say thematic products. So one example, retail, are more and more aware as consumers and investors alike about environmental challenges. So climate is key, but there's also now biodiversity or waste management. And when you think that trillions are being put into green stimulus packages, it makes investing in these sectors both an opportunity to do good and to do well, as the saying goes. And that, I'd say, comes with a second trend, which is, again, transparency. And transparency is about the product. How do they work? But not only, it's not just the means. People want to see results. And so really, they'll ask for reporting on like the Sustainable Development Goal outcomes of their portfolios, and that will steer the future investment decisions. Actually, I had a client who really nailed this demand for transparency. She said to me, investors want three things from solution providers, which are tell me, show me, involve me.
I think that's a great summary. I'm going to give Jennifer, she's got 30 seconds. What, Jennifer, would you like to see for retail investors in the ESG space in 2021?
I think it's really about expressing your preferences explicitly, right? If you have investment via your pension fund, for example, go to your pension fund sponsor and tell them about what is it that you care deeply most about. And, there are so many different ways to invest in companies that can align to what you care about, right? So, to Isabel's point, you should ask, right? And I think that's really powerful. If you don't ask, you're not going to be given what you really need.
Well, ladies, it's been an absolute pleasure. Thank you so much for joining us today. Isabelle Millat, Head of Sustainable Investment at Société Générale, and Jennifer Wu, Global Head of Sustainable Investing at JP Morgan Asset Management. Thank you very much.
Thank you.
Thank you.